watching BloombergQuint. Welcome to Talking Point. This morning I have with me Aneel Gambhir. He's the CFO of Blue Dart, one of India's leading logistics and express delivery companies. Now, there are several reasons for why this is an important conversation at this point in time. Let's start with the big picture. In the e-commerce area, obviously national logistics and door-to-door delivery are critical elements and very fast-growing ones. The Prime Minister also recently announced GATI SHAKTI, a national master plan for multimodal connectivity. This is a key goal, and the effort is to reduce logistics costs and improve supply chains. And we've seen many new players in this space over the course of the last 4 to 5 years. One that is about to go public very soon, and Blue Dart, like I said, has been public for a while and is one of India's largest logistics companies, at least in the public space. So we're happy to have Mr. Gambhir here to talk about not just the very strong second quarter that they've had, but also the outlook for the second half and the broader outlook for the entire industry. Thanks very much, Mr. Gambhir, for your time today. Let me start by saying that it was a strong Q2. You had about 30% quarter-on-quarter and year-on-year revenue growth and almost close to record margins. Can you break down that for us in terms of constituents of growth, whether it was price hikes that helped, what was volume growth looking like, and what were the key pockets that contributed to this growth?
Sure. So firstly, good morning to all of you. Let me just start with the top line. So as you rightly mentioned, there have been strong top line in the second quarter, which we recently declared the result. This has a combination of 2-3 things. One is the top line growth has a component of better realization, which you mentioned about the price hike which we had announced last year, we to cover up inflation, we've been taking that for last 2-3 years. Apart from that, there's a strong volume growth as well. We have seen a strong pullback post the wave 2 of pandemic. From June onwards, we are seeing a strong pullback and growth in volumes. So that has also contributed in a better top line. Apart from that, I think since we do have a fuel surcharge mechanism, which also when fuel prices go up, so that also adds to top line. So all the 3 components put together, one is better realization and also volume growth, and the third small component related to fuel, surcharge. All that makes up this kind of growth. And obviously, we are just talking after the pandemic. So post-pandemic, generally we see a pent-up demand kind of scenario, which we've seen during the first wave also. So currently, there would be some element of pent-up demand as well, which would have been there in these numbers.
So what does that say for your second half outlook? I know you announced another price hike that comes into effect in January, 9.6%. You mentioned that any changes in fuel pricing are a pass through in most of your contracts, both on the upside and on the downside. Do you expect this volume growth to continue because you already have the better realization sort of kicking in the second half as well? So will volume growth remain steady, improve, and therefore will you be able to outdo the first half?
So as we were talking about, first half has been strong, and in second half, the third quarter, which currently is on, has been a festive quarter, which generally has been strong for us in all these years, and that's the best quarter in a year if you look at it. So I think volume traction in current quarter is on the lines of what we have witnessed in the past. But then given the pandemic situation and the impending wave 3, it'll be very difficult to predict how the scenario would be. But the fact is that at this point of time, looking at all indicators on economy side and also on the current volume growth, the way currently it's behaving, we feel that we are confident that probably we will do on an annual basis do better than last year, much better than last year on the top line.
Okay, and with the 9.6% price hike that will come into effect in the fourth quarter of the year, will margins sustain at these record levels, or do you expect a petering off, over time?
So for margin, I'll take you slightly back in history. And if you recall our interaction sometime back, about 1.5 to 2 years back, when we were talking about doing many changes on a cost efficiency side. And we have been working on that, and you've seen the result over a period of time, how efficiency in terms of be it manpower productivity, capacity utilization of vehicles and also aircrafts, and also various financial engineering which we have undertaken during this period, have all of them have paid off, and that's why you're seeing currently the margins have improved, and is close to the record margin which we had in the past. So going forward, our efficiency program is continuing. We are looking at more and more opportunities, not only on capacity utilization side, but also some of the initiatives on automation side also currently being implemented. So we feel confident that we will continue to maintain margin, if not improve, on the backup of this new initiatives and also the past initiatives which we have been paying off. Having said that, I would like to put a disclaimer here. Since we are a fixed cost model, so fixed cost obviously provides, when you grow volume, in a healthy way, provides operating leverage. So that operating leverage after certain point of time requires much bigger investment, because fixed cost capacity utilization reaches to a level. So maybe, if the current way volume continues to grow, we'll have to have more facilities and more infrastructure to be put in, which may have some bearing on the margin as we move ahead. So from that perspective, I think overall perspective looks good, but then there could be investment required to handle larger volumes. So that could have some bearing on the margins.
But that's good news. If you see demand picking up sustainably enough for you to want to put more money to work from an investment point of view, then that is, generally speaking, good news. Now, that is, I think, the core of the conversation I wanted to have with you, because Q2 has come and gone. I think the mid to long-term view for this sector is very interesting, given the few players that already exist in the public space. A competitor of yours, Delivery, is about to go public in the next few months. So there is heightened interest in this space. I want you to talk us through what kind of growth opportunities you see. Let me talk about expansion from one point of view, or CapEx from one point of view. You just converted, I think, one leased plane into a purchased plane. So you now have 6 planes. Air delivery or air transport has been your key area. Will you be looking to grow that more than road? Or where do you see most of the expansion activity coming?
So you rightly mentioned there are 3 angles in this. One is road, one is e-commerce, and the third one is air space, which you talked about. So let me deal with all of them individually. So first, let's talk about road. So road, obviously, with the current economic scenario and the way all indicators are talking about, the highest growth probably would come between e-commerce and road space. So road is going to grow much faster as compared to air. Air will also grow, but then may not grow in the same percentage as the way ground would grow. So focus has to be creating infrastructure for ground growth, which will require bigger warehouses, facilities, and last mile delivery capabilities to be built in, with the strong growth in volume. That's point number 1. On e-commerce side, I think there's a big headroom still available, because we are still at a very small percentages spent of retail, which if we benchmark with other countries. So we know that other countries about 13-14% of the retail, or some countries have 15% of the retail being part of or 15% of retail spend is e-commerce spending, while in India it's about 3.5-4%. So still there's a lot of headroom available. To catch up that, I think this will also grow faster. So from that perspective, capability to pick up and deliver on e-commerce side also would be there. And the third space which you talked about, aircraft, and let me give you not just one. We acquired 3 aircrafts in last less than a year, which were earlier on lease, and that is a part of our cost efficiency and financial reengineering part, because when we did analysis, buy versus lease, we found that buying is a better option from bottom line perspective. So last year December we bought 2 aircraft which are on lease, and this year in October we purchased another one. So now we have 3 aircraft which are on the books in our subsidiary company, which is Blue Dart Aviation, and 3 aircrafts are continuing to be on lease at this point of time. So we keep exploring this avenues. If it makes sense for us to own, we will own that. Otherwise, it will continue to be on lease. That's so on the capacity expansion side. I think on all the 3 fronts we have been engaged, actively engaged on reviewing it, and as and when required, we will keep adding capacity here so that we respond to the growth requirement of the market and deliver, best customer experience, which Blue Dart is known for.
So can you explain to me, when you say road and e-commerce is also road. So how do you sort of distinguish between the two? By road, do you mean larger supply chain activity and not door-to-door delivery as in e-commerce?
Okay, yeah, very good question. So let me give you clarity. E-commerce is a vertical. There are various customer verticals. Similarly, e-commerce is vertical. So for us, e-commerce vertical has got two components: either move by air or by road. So from that perspective, our major focus has been moving by air. Because that's where the value proposition Blue Dart has it. While we do have ground offering, but then currently high value shipments which are transacted on e-commerce portal are moving iPhones, etc., which are high value and stored centrally. So this becomes a central distribution, because small value items you can store at a decentralized place, but bigger value obviously becomes a little difficult. So for which generally companies get into central distribution, and that's where our play is. So we move that by air, and that is one of the major portion for us on e-commerce side.
Okay, and when you say road, what is your business exposure to road? And even in e-commerce, the last mile delivery would still be road, right?
That's right. So last mile delivery, in any case, be it air or be it ground, it will be by road only, or either by cars or maybe vehicles, depending on shipping profile, would be there. So accordingly, it takes place. So when you talk about exposure, I think both areas are growing with the pandemic. I take you back pre-pandemic scenario, customer preferences were not age, focused by the e-commerce players, because they were looking at more of a cost optimized solution, whereby deliveries were scattered over a period of time, and generally preference was to move by road. So as a result, shipments were started moving, or it was getting converted from air to ground. But during pandemic and post pandemic, there's a marked shift in the customer behavior. And which you are seeing that because customers are no longer wanting to wait for a longer period of delivery. So whosoever delivers faster, they accept that delivery and rest gets returned. So that's a dynamic change in the e-commerce space, and that's where focus has come back on air movement. So now if you talk about, so air movement has improved a lot as compared to the pre-pandemic scenario because of shift in customer requirement. So we are seeing good traction on the movement on the air side, and that's where we have a very healthy growth on volume coming from e-commerce customers.
Okay, so how do you position yourself for growth? Because I understand that the Surface Express segment roughly contributes about 30%, which is the road segment, if I can call it that. 70% of your revenue comes from air or air transport. That's one question. Secondly, what constituent or what percentage of your revenue is B2C? And is there what is the contribution of B2B in any fashion? Is there scope for expansion in that area as well?
So first, let me deal with your first question on air versus ground. So while initially Blue Dart was known as a air express player, then and our USP was safe and reliable delivery. So taking the same USP, we thought we can replicate same on the ground, and which we have been very successful. So when we launched our ground product in 2009, the same USP of safe, reliable delivery we have replicated, and we have grown our market share. So initially when we started, this about 4.5% kind of market share. Currently we are about 17-18% market share, which we have at this point of time. We've been growing market share, and our idea is to have leadership in both air as well as ground. So we are already a leader in air express, and we want to be leader going forward on ground express as well. That's we are on the path which we have been working on. So that's the air and ground segment that both would be, we'll aspire to continue to have or attain market leadership in both the way of carriage.
And sir, before you answer the second part of my question, just on this air and ground bit, so road is, I think, more than half the market, right? When it comes to logistics, 57%, according to a RedCM, sort of report. So I'm just curious, do you believe that the emphasis on road will be a lot more for your company over the next couple of years, and that as a contribution to revenue, road will become much larger than it currently is, which is at 30%?
So as far as we are concerned, our emphasis on air and ground will be continuing. Not that we will, try and give more focus on ground. But having said that, I would say since it is expected that ground will grow faster, so obviously in the revenue contribution, ground portion may increase, but that is because of market dynamics and not because of our shifting of focus. So we'll continue to focus both on air and ground.
Okay, and is if road becomes a larger percentage of your revenue or your business, even if it's because of market dynamics and not because you're doing anything to change the mix, does that change the margin profile of your business? Because is road more, let's say, capital intensive or lower margins in that sense?
So from our perspective, we've been operating on, especially on road side, on asset light model. So we don't own trucks. We have been hiring those trucks. So it does not become capital intensive. Having said that, I think the focus which we will have, on both the products and the margin profile which we have currently, it will not have material impact on the margins.
Okay, so even if road were to become, let's say between road and air, it's a 50-50 equal split, your margin profile doesn't get impacted in any substantive way.
Yeah, it will not have material impact.
Okay, fine. Now B2C and B2B, so what is the distribution of revenue for both?
So roughly about, I would say 1/5 of the revenue currently comes from the, B2C side, which is e-commerce side. Which is a very, significant contribution to the top line.
1/5 comes from e-commerce.
Yeah.
Which is B2C.
Yeah.
Roughly, and 4/5 comes from B2B.
Yeah, that's right.
Okay, so where would the emphasis for growth be in these two? Mostly e-commerce, because that seems to be the faster growing space.
So as I mentioned in the beginning, the growth verticals are going to be ground and also e-commerce space. Both will be focused on in a way that we capitalize on the growth while not ignoring the air segment, because air also would continue to play a major role. So our focus will be on all three, and that's where we'll have dedicated teams on each of the place to ensure that we don't compromise on the opportunities.
Okay, so as you review your plans for the next few years, and I understand that we're still in a post-pandemic phase, so these are not yet carved in stone. You all are still assessing which trends are sustainable and which are not. But give me an idea of whether a lot of the expansion will then happen. If e-commerce is the big driver, roads is the big driver, a lot of the expansion for you will be new zip codes in tier 2 towns. Is that the right way to understand this?
You're right. As consumption story continues to be in tier 3, tier 4 cities, so we had done aggressive expansion in 2018, and we'll add on to that. And the zip codes or the pin codes, which as they are known in India, would continue to be focused not only from the perspective of last mile, but also, in fact, one of the region, if you see in a contribution in top line, is also coming from tier 2, tier 3 cities, where we focus on getting outbound from there. So we will have business opportunities in newer towns where growth will be, and then those will be focused for both sides.
So is that an active plan? Do you already have a large number of tier 2, tier 3 towns that you intend to add to your network? Can you give us an idea of how your network may expand between where it is today and, let's say, a year down the line?
So I think the network currently covers the entire country. Network is not.
I understand, but I mean last mile. I mean last mile network.
Right, right. Creating last mile, infrastructure in some of the towns which are not at this point of time active on service. We would, in short span of time, we'll come back with our plan, which will be known to everybody.
But it's fair to assume that what is your last mile connectivity in terms of numbers today? How many towns do you have last mile connectivity in?
So currently we cover about 14,400 pin codes.
Right.
Out of officially 19,000 pin codes which Post has it. So, so we did expand up to 18,000, but in 2019 beginning, we saw the servicing those pin codes were quite not cost effective. So we rolled back and did rationalization, and then kept it at 14,400. Thereafter, we have been revisiting our some of the pin codes where we see business opportunities, and we have been expanding. So having said that, now again we are reviewing our plan that within the revised scenario, does it make sense for us to have expansion into unrepresented areas either by ourselves or maybe through channel partners. So we are looking at those areas to be covered.
Okay. You also have Blue Dart Med Express that is done very small still, but that is done reasonably well for you in the last couple of quarters. And I did also notice that you're also offering chartered flights based on the aircraft that you have. Are these, sort of large thrusts for growth in the next few quarters to come?
So you're absolutely right. Your research is really good. So first, let me deal with charter. So charter's opportunity started during pandemic wave 1. And since then, we have been continuing to have some opportunities, and we have been growing that part. And as we move ahead, and actually it also allows us sweating of asset, because while we operate our network in the night, during daytime we are able to use this aircraft for charter opportunities. So so we are actively engaging on this with our customers, and as you know, there's a requirement, and it makes a commercial sense. We've been doing that, and going forward also this will continue to be focus area for us as well. While it is not as big opportunity at this point of time in our or rather not as much big revenue in top line, but going forward this will also be one of the focus area.
Can you give us some numbers, sir? And also, do you have to refit the aircraft because you're mostly cargo aircraft, right?
Yeah. So ours is all cargo aircraft. So when we talk about charter opportunities, it's not for passenger. It's only.
I know. It's cargo charter. I'm not suggesting you're suddenly flying CEOs back and forth.
Yeah.
But do you have to sort of change it for the kind of good services that you're using, or how does it work?
No, no change is required. It's only the permission required to fly into those countries. So earlier we used to do few domestic charters. Now we during pandemic times we started flying internationally. And and we have flown like Hong Kong, China, Wuhan, China, and Singapore, and many other countries in Middle East. So we've been flying that and exploring the opportunities. So it's an early stage, but that will be one of the focus area for going.
Any numbers that you can share on how big that business is in terms of contribution to revenue or anything like that?
It is not a big number, that's why I'll not be able to share that number. But then yes, going forward, that will be a good focus area for us, apart from focusing on tier 2, tier 3 cities.
So since you brought this up, and since you brought up international charter, I do want your view, Mr. Gambhir, on the last year or so that we've seen of supply chain blockages and distortions, especially in cargo trade on sea, several ports suffering shutdowns, lockdowns, and therefore massive delays in cargo movements, as well as a huge increase in price. Some of that is now finally stabilizing and maybe on the decline, maybe. But what's your view of what's gone on in the last year or so? Maybe not directly impacting your business, but providing it some upside?
Yeah. So what has happened during pandemic, since many things came to standstill. So as a result, and because of lockdowns or even productions getting skewed in some places. So as a result, there was complete imbalance in supply chain. As a result, you've seen the kind of chaos which has been there, across many countries, not just India, but many countries. As a result, it is, because of demand supply gap, not only on the products, but also on the availability of containers. The prices have gone through the roofs, and fuel price only added further fuel to the fire kind of scenario, because fuel prices also started going up. Post the wave 1. In wave 1, it had gone down, but thereafter has been continuously going up. So all that has added to increased costs. In addition, in India, if you talk about, government had added a lot, extra duties to cover off shortfall which they were looking at in other taxes. So that is further added within India. If you talk about issues related to fuel prices, So all that put together has impacted the cost of operations, especially on the logistics side. But I guess going forward, is some of the steps have been taken. Government has reduced the duty, and some of the state governments are looking at reducing duty within India, and globally also supply chain coming back post the wave 2. Though again, I hear that wave 3 is started creating some kind of ripples in a few of the countries, but hopefully it may not spread the way wave 2 or wave 1 was there. I pray for that, so that we continue to stabilize our supply chain, and prices start stabilizing. So that's a view I have it going forward. But is another article which I was reading, that container shortage still will take a lot of time, because there's a complete skewed supply which has happened, and may take some more time before it comes back to the normal level.
So how does this impact you directly and indirectly? Only in terms of input costs, because the fuel costs are passed through, as you already explained upfront, and that's well known. But in terms of input costs, let's assume if this container crisis, wanes and things somewhat stabilize or normalize, does your input cost then reduce, and therefore, is that again beneficial for your margin, or is there some other indirect impact that I've not been able to understand?
So I think this impact may not be age much. In fact, if it stabilizes, probably it will give us opportunity, because many people who are wanting to import material, they are not able to import. So as a result, manufacturing is suffering. So the moment the supply stabilizes, I'm sure they will be able to get raw material for production and distribute locally as well as for exports. So that could be opportunity going forward, rather than impacting.
So your B2B business will then grow more rapidly. Is that what your point is?
It would have opportunity for us to grow if manufacturing, raw material comes in time, and then people distribute that for consumption.
And any sort of numbers or opportunity that you can put to it that makes it a little clearer to us?
It'll be very difficult to put that by when it'll happen and how much will it happen. Depends.
Oh, what's the scope? What's the broad scope?
So a broad scope is that yes, it offers opportunity because manufacturing will grow once you get required raw material from abroad, and in fact generally we've seen double impact of that. One, that when we move raw material for manufacturing, and second, the movement of finished product for consumption. So generally it has a double impact on domestic market. Be it export or even.
But it hasn't shown up in your numbers. The fact that this blockade or these disruptions have been going on for the last several months and have peaked in the last couple of quarters, that has not showed up in your B2B numbers, has it?
No, not exactly. That's what I'm saying. It's an additional opportunity. I'm not saying that it will impact badly.
Okay. No, not badly. I mean, if it hasn't hurt you much, then can it benefit you much? That's what I'm trying to.
Absolutely. That's what I was trying to say, that given the current pandemic and pent-up demand scenario, so probably currently there's some pent-up demand which is built in. But then going forward, once this container movement smoothens, then probably there'll be better imports of raw material, manufacturing and export, and also local distribution.
Okay. One of the other growth areas, you spoke to me about charter. What about the Med Express? I know that you all are deploying drones to be able to deliver medicines in, sort of remote areas. Is that a scalable, large-size business that you intend to grow over the next couple of years?
Yeah, so it was a good initiative from the point of view of exploring newer opportunities and using technology. So that's where we secured this permission from government, and we did test flying in August, and still pilot flights are going on, and results have been quite encouraging. Now we are piloting in different areas, more especially trying to do piloting in northeast areas which are generally difficult to reach. So we are trying to do that piloting, and based on the pilot result, obviously this services would be available for emergencies kind of a situation, which could be anywhere in the country. But then as a regular distribution, probably there's still a long way to go. Because we need to have kind of infrastructure within country and how it will get regulated. Though government has announced a policy on flying drone, it's a draft policy. So we'll wait for the final policy, the way it comes up and how easy it is to put a drone from local distribution. Depending on that, this call will be taken. But at this point of time, what is looking viable is probably in an emergency situation where life and death situation, or somewhere some breakdown happens, or maybe places which are difficult to reach and you need to reach faster. Those places can be accessed to drone, and deliveries can be done faster.
So the factors are not yet in place for this to become a meaningful, sustainable business of any sort. Not yet.
I think, I think this will require a little more working to understand the commercially how one can exploit that, and also a lot more bearing will be there based on the government policy.
Correct. Since we're talking government policy, sir, let me ask you about the Prime Minister's GATI SHAKTI program. I know right now we only have very broad parameters of what the government's seeking to achieve, more coordination amongst ministries and states, a central screen that will be able to help facilitate more efficient logistics movement in the country. What are some of the highlights according to you?
So from policy point of view, if you look at it, I think this government has been focused on reforms and infrastructure improvement. In last 6-7 years, we have seen large number of reforms on existing rules and acts which are there, and some of them have been repealed, some of them have been made robust. And also infrastructure side, be it various projects which have been undertaken, Sagar Mala, Bharat Mala, dedicated corridor, ports, logistic parks, lot many things. I think this is a laying foundation for a faster growth. And this initiative, especially the GATI project, which GATI SHAKTI project which we are talking about, is a kind of a master plan which embeds digital platform for coordination. Basically, what used to happen that currently any infrastructure project which is taken up, there are many stakeholders, and if all of them are not onboarded, the benefit of that project goes for a sixth region being, either they will come up, or during the implementation of the project, they would have requirement or some change would be asked for. As a result, project will get delayed or cost overrun will happen. So I think this project or this master plan takes into account coordination or the lack of coordination which was there, which will be now done, and all the people accordingly will get prioritized, so that so what is required to be done first will be done first, and thereafter things are done in right order, so that one, that cost overruns are avoided. Second, there's a coordinated effort to make sure that infrastructure development happens and the benefit which are supposed to be realized are realized. Case in example, I'm sure all of us have witnessed many times where a new road is laid, and after that, maybe a utility company comes and digs up newly laid road, and we feel that why they cannot coordinate. Similarly, we've seen many places, either infrastructure or industries put up, but then there's no utility available, or there are still gaps because of certain issues. Various departments have it. So I think this is a very very good effort, a coordinated effort by combining so many ministries to make sure the initiative which has been undertaken, everybody supports it, and they play their role where they are required, and right prioritization is done in the process to get benefit of efficiency. And what we have seen is that once government investment comes in, and especially in infrastructure, generally immediately after that there's a private investment, which generally is 2 to 3 times of the what investment government has made it, because the infrastructure leveraging of infrastructure happens through private investment by putting industries or
Sure.
So
Mr. Gambhir, can I ask you a related question to this? Will all of this help reduce logistics costs in this country? Because we are, I think, at the higher end when it comes to global competitiveness in terms of logistics costs. Yeah. And do you see a clear roadmap in terms of costs going down? And therefore, do you see that growth could get accelerated?
So absolutely. In fact, I was coming to that point only, that once you have no issues, when you have a good infrastructure and also further boost of investments, which will further improve requirement or the utilization of current capacity which are there. So we have seen that the moment you have better infrastructure, you get efficiencies not only on moving goods on logistics side, but also in local distribution. So all that augurs well from industry, from logistic industry point of view, that once you are able to better utilize capacity, you are able to move on time and you are able to deliver on time, so which saves a lot of cost. So currently, as we know, the logistic cost is about 13 to 14%, and government's target long term is about 8 to 9% kind of logistic cost. I think all this infrastructure improvement will result in efficiencies, which in the end will result in improvement in the or rather reduction in logistic cost. So improvement in efficiency for win-win for both customers as well as for logistic industries.
Okay, I have one last question to ask you on this theme of growth and expansion, and that has to do with the fact that I think only about 3 to 4% of the logistics sector lies in the organized space. And I think the Red Seer report suggests that the top 10 organized players account for about 1.5% of the logistics market in India, whereas let's say in the US it's 15%, in China it's around 10%. So the 5 to 10-year picture looks very robust if you look at the scope for formalization, if you look at the scope for consolidation, if you look at the benefits that come in from macro policies like GATI, SHAKTI, and the lowering of logistics costs, and therefore the increased or heightened movement of goods.
Yeah, you're absolutely right. So all this infrastructure, focus, and more especially on the logistics side. So government has not only enabled infrastructure, but also on ease of doing business point of view, like logistic has been given industry status, so that the benefits of industry can be derived. In addition to that, there are many other policy frameworks like national logistic policy. You talk about e-commerce policy. These are all supposed to be ensuring that logistic not only grows, but also becomes efficient. So what you mentioned about growth in organized sector, I think we are beginning to see that proportion or the ratio increasing because of all these initiatives, and also government's regulatory framework, which is becoming much more tighter after the reforms. So all that will force this organized business to grow and the percentage to grow. What you mentioned, there's a lot of headroom available in this as compared to other countries, and we'll be well poised to get into that kind of scenario.
So from 3.5%, do you think in the next 5 years we could go to 10% in terms of the formal sector share in the logistics industry? And if that's possible, what does it mean for the rate of growth for companies like Blue Dart?
I would not be able to comment whether 3.5.
I'm not asking you for guidance. I'm not asking you for guidance of the industry or the company. I'm just trying to understand whether we are at a place where the growth could here on be exponential, or will it still be just trend growth?
So we just talked about various indicators of growth and levers of growth. So you talk about infrastructure, you talk about policy framework, you talk about government intents, or also talk about the manufacturing push which government has been giving, and all results in positive growth in GDP, right? So if you review all these indicators, it gives a very good positive outlook about the industry. And from that perspective, if you look at it, obviously the 3.5% would grow, because when we are talking about all enablements, all the components working well, from distribution side, from
Gambhir, 3.5% will go to what in 5 years? Give me just an estimate. Nobody's going to call you back 5 years later and hold you to the number, sir. We understand formalization is a complex process. I'm just trying to figure out whether, let's say, for a company like Blue Dart, based on where you stand today, based on the kind of formalization and consolidation we can see in this industry, are you set up for dramatic growth in the next 5 years?
See, if you look at current scenario we are in, earlier we used to talk about VUCA word. Now we moved one step ahead from VUCA to pandemic word, where you don't know what will happen maybe a month down the line or 2 months down the line. But yes, business plans have to be there, but they have to be agile to accommodate the scenario. while there's a good amount of outlook, positive outlook, which you are talking about and all of us are reading and all of us are bullish about it, the fact remains is that you put a number in current scenario would be a big risk at this point of time. But
okay,
yes,
let me put my question to you this way. You don't have a large capex plan right now, right? You've just spent, in the last couple of quarters, you've reduced debt, you've made your balance sheet more efficient. Are you preparing now to be able to invest more over the next 2 to 4 years to be able to take advantage of this potential growth, or do you still say it's too early to tell?
Okay, answer to that lies is that now that we are lean in, completely that the exercise is done, so we have now good potential for going forward, depending on the business plan, how it pans out, to create a growth scenario and invest. So if you look at in the past also, we had not lagged behind. In fact, when GST was introduced, immediately we saw that there's a potential for growth, and we in 2018 took a very aggressive expansion plan. We grew not only geographical presence but also number of infrastructure wise, from technical background, access to systems, etc., and also our number of offices, including the physical network. So all of this growth was done in a short period of time, and going forward we will continue to review and we will have our plans, though we currently also have a plan, but then the fact is the plans are agile and we'll continue to invest depending on what is required from the market point of view. But one thing I would like to assure you, given the current positivity or the outlook in the economy, we are fully geared up to handle those kind of growth. That
where do you see Blue Dart in the competitive landscape? Because you have another competitor, delivery come to the public markets now, so they will also absorb the attention of investors. So you will have to fight that much harder for investor attention. How do you hope to be able to do that?
Yeah, so competition has been there in the past and will be there. Nobody can wish to do away with competition. The fact remains is that rather than focusing on competition, you focus on your own core competence and customer delight. So we are focused on delivering best of the service quality and customer delight. Then obviously, competition would need to work harder in that space to vie for that space. So our focus continues to be customer satisfaction and customer delight, while competition was there, and we will continue to deal with as things pan out.
Mr. Gambhir, you have successfully evaded all my questions on any potential growth, estimate for the next few years. But thank you very much for speaking to us here on BloombergQuint. Maybe in a couple of quarters, when the fears of a potential third wave recede, you will be able to give us a firmer outlook in terms of growth potential over the course of the next few years. But thanks very much for your time here on BloombergQuint.
Thank you. Pleasure joining you. Thank you.
Thank you.
Have a good day. Thank you.